the ETH is money panel, the thing we've all been waiting for, the best panel on Ethereal. Well, no, I don't mean to offend anyone, but all right. So I'm Camila Russo. I'll be moderating the panel. I'm the author of The Infinite Machine, a book on the history of Ethereum, and the founder of the Defiant, a content platform focusing on decentralized finance. And I will let our speakers introduce themselves briefly because we have a lot to get to. I guess starting with Eric and then going like clockwise.
You muted Eric?
Yeah, if you can all introduce yourselves.
I think Eric's having mute troubles.
Oh no. All right. Okay. So maybe Anthony, you go, and then hopefully Eric will have figured it out when we're done.
Oh no, Anthony's muted too.
Oh my God, what's going on? All right, Ryan.
Hey, can you hear me?
Yes.
Can everyone hear me? Okay, perfect. All right. So I'm Ryan Sean Adams. I am a crypto investor. I am the founder and writer at the Bankless program, and I am slowly breaking up with my Wells Fargo account.
Can you hear me before I start?
Yes.
Okay, cool. I'm David Hoffman. I'm the COO at RealT platform, where we tokenize US real estate and put them on the Ethereum blockchain for DeFi to leverage. And then also, as you can tell, me and Ryan also run a podcast together called Bankless.
All right. Okay. So Eric and Anthony, are you able to? No, you're not. Okay. What do we do? Should we? So do we wait, or should we do this panel with just Ryan and David?
Well, we can start, Cami, if you want.
Okay, let's do that. All right. Okay. So
Eric, Anthony, sorry to cut you off. Eric and Anthony, make sure your microphone is selected with the gear icon. If you open that up and select the input, there should be the right input there. Sorry, Cami.
I guess you guys can hear me now.
Yes.
Okay, that was weird. Yeah, that was it, David. I don't know what happened there. Anyway, I guess, quick intro, co-founder of EthHub, product marketing manager at Set Protocol. And I think Eric's should be fixed as well now.
Eric? I guess like the same like gear thing should be ticked off, but all right. So anyways, Eric, hopefully you can join us soon. But let's get started. So I wanted to first start with getting everyone on the same page with the generally accepted definition for money before we can establish whether ETH is or isn't money. So money is defined as something generally accepted as a medium of exchange, a measure of value, or a means of payment. So I think everyone here will, agree that ETH is money using that basic definition. Like we've all used ETH to buy stuff, even if it's gas to use an Ethereum application. We've all used it. It works well. But I think to bring this conversation forward, I think the discussion should be around how good is ETH at being money. And so I wanted to discuss the other attributes which define money as being the best way to solve the coincidence of wants problem. Just have it be the best tool to get someone who wants to sell something, get somebody else to buy it from him. And so those properties are, it should be fungible, durable, portable, recognizable, and stable. Okay, so and just to get the conversation going fluidly, we were saying, we'll start with Anthony and then go clockwise with each question. But I think from those values, it's pretty clear that ETH is fungible, right? I mean, every ETH is equal, and I think that's a property that's made even clearer with digital assets. Do you guys agree?
Yeah, so I'll start. I think you outlined the points very well there. These were the same points that I had in an article that I wrote about 2 years ago before the ETH is money kind of meme was, born, essentially. I think I wanted to also set the record straight that when we say ETH is money, we're not saying it's only money. I think a lot of people get hung up on that, and they think that we're saying that, we're just putting ETH into this bucket and saying, okay, it's only money, it can only be that, it's not anything else. But it's definitely not that. ETH is money, and ETH is a lot of other things as well, of course. But I think I wanted to focus on the one characteristic of money of being stable. I think that's one of the most important, if not the most important, of being good money, as you were talking about. Like, is ETH good money? And it's not great money. Like, I personally would rather not spend my ETH to buy something if I could buy it with like USD because it's stable. My ETH, I'm expecting to go up. There might be tax related kind of things that happen there as well. So yeah, but I have used ETH as money for lots of different things before. There are things that are priced in ETH. I mean, all the ICOs were priced in ETH. You could only buy into them, most of them with ETH, right? And same with like things like God's Unchained cards or other NFTs. Most of the time they're priced in ETH. So I use ETH as money to do that sort of stuff. But yeah, if we're talking about if ETH is good money today, it's not compared to something like a stable coin, right? Just simply because it does not have that stability. And I think the tax stuff is not talked about enough, where, incurring taxable events just for spending something that, is supposed to be an investment vehicle, but you're using it as money is another big, I guess, point there as well. But yeah, I'm curious to hear Ryan's thoughts here too.
Yeah, so I think those are great points, Anthony. I guess I would say, Cami, as you said, like ETH does check the box as a store of value, medium of exchange, and unit of account within the Ethereum economy. But there are also other monies within the Ethereum economy that are better from a stability perspective. I talk often about like, I don't ever want to spend my ETH, right? Because I think the price of ETH is going to go up. And the same reason I don't want to spend my Bitcoin, but I will spend a stable coin that's derived from ETH, like a DAI, for instance. And here's like, I think when we talk about ETH as money, one of the attributes we're actually talking about is ETH, the asset. So Ether, the asset that sort of is the reserve asset of Ethereum that has a monetary premium, which means it has a value as either a store of value or a medium of exchange or unit of account. And right now, if you look at the Ethereum economy, Ether, the asset, serves best as a trustless store of value within the Ethereum economy. Why is it the best trustless store of value? Or we might say, why is it the best collateral on Ethereum? Why is it the best asset to back something like a DAI or synthetics? Even if you're trying to make an S&P index on Ethereum. Well, the reason it's the best is because it is the most trustless on Ethereum. So all of the other assets on Ethereum have some level of additional trust that's required either from an issuance perspective or from a settlement perspective. So Anthony was talking about USDC, right? That's better from a stability perspective, but essentially USDC is just an IOU for some dollars in a US bank account, right? So what am I trusting when I'm using USDC? Well, I'm trusting the US banking system. I'm trusting Coinbase. I'm trusting the Center Consortium. So it's not, if you're trying to build a decentralized banking system and a decentralized money system, then ETH is really the best asset for you to build on top of because it is the most trustless asset inside of the Ethereum economy. And then you add to that, and I'd be interested in hearing David's thoughts on this. You add to that, the reason why holding ETH is so valuable and so interesting is because ETH is scarce, and it's getting more and more scarce over time. It has these incredible in-game scarcity mechanisms that make it something that you want to hold because it's going to increase in value. I don't know, David, if you want to riff a little bit on the scarcity aspect of ETH, but to me, when we say ETH is money, what we're really talking about is ETH is a reserve asset of Ethereum, and it has a monetary premium. So it's valued as a store of value, as a collateral, as a trustless reserve asset for Ethereum.
Right. Okay. So before David answers that, I wanted to address this question, which is, so ETH is better at being collateral for other assets like DAI, for example, that are more stable and better suited to be actual money because of the stability side of it. But does that make Ether money, or just, it makes it good collateral? It makes it a store of value, which doesn't necessarily mean it's money. Like maybe it's more like gold. Like gold used to back the US dollar, and it wasn't considered money when it was backing the dollar. It was used as a store of value and collateral. So if we're saying that ETH is better as that, then maybe we're saying ETH isn't really good at being money after all. David, what do you think? Oh, I think you're muted.
Hey, David, you're muted.
Still muted. Okay. Anyone want to go for that? Well, Dave figures this out.
Yeah, so I'll take a shot at it, Cami. So I think when we say ETH is money, what we're, money is, I think, better thought of as sort of a spectrum, right? It's almost like an adjective. Is that David coming back on?
Okay, I got it. So
there he is.
Okay.
I don't know what's going on, but I just changed the microphone to my local computer microphone. So whatever. Guess don't need to be a podcaster today. What I was saying earlier is with money is just really poorly defined. What money is has changed a lot throughout history. And so when we talk about this is money or this is not money, we actually don't really have a good anchor point to really compare that to. Money, the current version of the dollar came in 1972 or 73. So it's very, very recent. And so if you go out on the street and ask somebody what's money, they're going to pull out a dollar and tell you that's money. But that's only been money for the last 30 years. And so if I think the most reductionist of a definition of what money is liquidity. It's liquidity distilled inside of some sort of token, some sort of symbol, and gold or dollars are just the carriers of this symbol, of this. It's a representation of liquidity. And so when we talk about ETH as money or Bitcoin as money or this new crypto asset is money, what we really need to talk about is when you sell it, can you sell it for anything that you want? Because money is supposed to get you whatever you want. It's equal amount of its worth for some other item. And so when it comes to on Ethereum, if Ether can do anything that any other asset can, then ETH is money, right? And if Ether can do whatever a paper dollar can and more, then ETH is money. And so if Ether is being collateral and it's also extremely liquid for for payments, then ETH is being really good money. And one thing I don't think we've really touched on with the whole ETH is money conversation is humans are only 1/2 of the users of Ethereum, of crypto networks, right? Robots now are users and transactors of money, and Ether is really, really good money for robots. And so this whole entire new paradigm of contracts that can operate on their own needs something like Ether, which has the strongest amount of settlement assurances of any asset in the world. And so Ether for robots is really, really good money. And because robots are using Ether as money, it makes Ether better money for humans too.
I mean, it isn't great money for robots when it breaks down liquidation systems because it's so volatile. You know, we still have a stability problem there.
I would say that the robot was acting poorly, not Ether in that case.
Maybe. Okay, so I think, yeah, like the stability, I think we've kind of discussed that it is an issue with Ether. I think we've certainly established that Ether makes great collateral. Maybe it's on a spectrum of being great money where DAI is at like being very good money. ETH would maybe fall farther behind. Because of the problem of stability. Eric, Anthony, I don't know, do you want to add to that?
I don't know. Can you guys hear me?
Yep.
Yes.
Yes.
Oh, hey. All right. I was just here as an observer checking. Yeah, I wanted to just watch you guys the whole time. So for reference, you can't use a microphone mic on this thing. It causes problems. Mm-hmm. Anyways, yeah. So, I mean, the stability aspect, I think people get caught up in thinking stability is a requirement of money. It's not really true. Like, I think we're seeing the emergence of a new money. We've seen emergences of new money throughout history, right? I mean, kind of back in the day, money is used for goods and services and like trying to buy these goods and services. Before we kind of established a fiat money system, you know, we had bartering. So someone would say, hey, I'm going to trade you my cow for your corn. Prices of those were not stable, right? But they were used as money per se. Then we went into this commodity money concept where gold was backing it. And, you know, gold has its volatility as well. You know, people day trade gold. It goes through, you know, 5-10% pumps here and there and dumps. So I agree that is the volatility ideal for ETH as money right now? No. But, you know, I think as time goes on, it's proving to be more and more stable as well. I mean, geez, ETH's been stuck at what, 100 to 200 for 2-3 years now. So theoretically, it actually is pretty stable if you look at it that way. But, you know, volatility is, you know, I think eventually throughout time, something you'll gain as a principle of this money, but it's not a necessity per se.
Yeah, and can I just add something to that, like building on Eric's point for a second?
Yeah.
So yeah, David was talking about kind of the killer feature of ETH is that it's really good for money robots, right? And then Eric was talking about like stability is not necessarily needed. The cool thing about Ethereum is because it's programmable, you can take a stability money robot, right, like a maker, and then you can combine that with the trustless store of value of ETH. And then you can create something like DAI, which is 87% backed by completely trustless store of value. So when we say ETH is not money, but DAI is not money, well, DAI is actually ETH, right? Because without ETH, it wouldn't really be backed by anything. And if it was backed by more trusted collateral sources like USDC or, you know, a WBTC, something like that, then it would no longer be a trustless money asset. So to me, it's like absolutely fundamental that at the base layer of Ethereum, you have this completely trustless, you know, reserve asset, a gold-like asset that might be highly volatile, but when you combine that with a money robot, and we've only just scratched the surface. I mean, we've only seen DAI. I bet we'll see tons of different stability robots that are built on top of ETH in the future. Well, then you can create like this programmable, trustless, stable version of ETH that is a better money. And that to me is like the power of the system.
Right. Yeah. I think it's pretty clear that ETH has so far been great at providing the building blocks to create an actually good and usable money. It's unclear still, like, I think whether that's enough to call it money itself. You know, the fact that it's backing something that can be used as money means that it actually is money. But moving on from the stability aspect, I actually think there's another one of the features that I mentioned starting out the conversation that's sometimes overlooked, but that can also pose a problem for saying that ETH is money, which is that money needs to be recognizable. So that means that the authenticity and quantity of the goods should be readily ascertainable to the users so that they can easily agree to the terms of an exchange. And so I think that that's true for Ether inside of the Ethereum ecosystem and network. Like, we all agree on the price of Ether, and Ether is used to exchange a number of things that we all mentioned, from gas to NFTs to ICOs to different tokens. But what about, we're living in this small Ethereum bubble. What about for how recognizable is Ether for people outside of the Ethereum network? Like we want Ether to be kind of this global currency, but if it's only used in this like very niche and insular ways, how good is ETH at being money actually?
Okay, I'd love to start. Yeah. So recently we saw Dharma sending out DAI via Twitter, and so no one really needed to interact with any amount of Ether in order to collect DAI via Twitter, and the entire Ethereum blockchain was totally obfuscated. And the fact that Ether is backing DAI is already obfuscated away. And so, like when Dharma is sending DAI throughout Twitter, there's already 2 levels of obfuscation away. But because inherent to blockchain protocols is the verification of all transactions, like we don't need to make that rise to the surface. DAI and sending DAI is using Ether in this verifiable way because the money robots are doing that for you. And so you can just, swipe to send DAI, and then you're using Ether as a store of value, but in its stable form, via Twitter. And so I think that whole aspect of verification and using Ether and for people of all over the world to use Ether as money, I hope that a decent proportion of the world's population don't ever understand what Ether is. Like, that would be a good thing if they can just use DAI and see that there is a balance in their account that goes up when they get paid, and then when they buy something, that account balance goes down in a way that is expected and dependable. And if that's underpinned by Ether, that's great, but they don't need to know that. And because of that level of obfuscation, like, that Ether is still down beneath the whole system. It's still the collateral, the store of value, and then the stability is layered on top, and then the Twitter UI is also layered on top. And so I think that's how this is all going to unfold.
Right, with better UX UI, making it easier for everyone outside of Ethereum to also at least indirectly use ETH. Anthony, do you want to add to that? I see you nodding.
Yeah. You guys can hear me, right?
Yep.
Yeah, cool. All right. So, you mentioned that, Camila, that I guess ETH is like insular to the Ethereum economy. So it's used as money within the Ethereum economy, but it's not used as money outside of it. And, I've drawn the parallels before to in-game currencies. So video games that have their own currency systems. And one of the most popular ones is from World of Warcraft with their in-game gold system, which, it's actually been studied for the economics behind it, because it's a real, online world where people are transacting, they're saving, there's inflation because there's just an unlimited supply of the gold. People were actually trading it for, real US dollars, trading it back and forth. So that, money, the gold, was very good inside of, World of Warcraft, and you could get into it by using USD as well, by using real USD. It's similar to with ETH. ETH is extremely good money, I think, within Ethereum. Even without its stability, it's still a good money within Ethereum. It can still act the same, just minus the stability. It's the same thing as like DAI or USDC, just minus the stability in terms of like transacting with the, what it's accepted by, what merchants will take. Merchants are still going to take ETH. They could take ETH and just quickly change it over to, DAI or something via Uniswap, or just do it automatically via a payment processor. So I don't think ETH is like recognizable or good money outside the Ethereum network for sure. It's no one's really accepting it for goods and services. I mean, we accept it on the EthHub shop, but who knows about the EthHub shop besides Ethereum people, right? Like my mom's not going to use ETH as money, so all those sorts of things. So that point is definitely true, I think, but. I think as we go on, like to David's point, we'll have ETH as that base asset backing these, these monies that people will interact with without even knowing that it's backed by ETH. So people one day will interact with DAI and use DAI. People probably they already do in maybe the countries like in South America where DAI is being pushed as this stability hedge. Maybe they have no idea about ETH and they don't know that ETH is backing it, and they're just using DAI because they're like, oh, okay, this is equal to $1, and they're using it for their needs. So I think that's the path that we're kind of like walking down, and I don't think that takes away from ETH's moneyness at all.
Yeah,
I think we're on track, but not there yet.
Yeah, I just want to add one quick point to add on top of David's a little bit. And to understand money supply, people often think that money supply is measured just with cash. There's actually many layers to the money supply. So like, I don't want to go too into the weeds here, but like M0, M1, M2, and all the way up to, I think it goes like M7 or something like that. But at the base of this kind of like layer is cash. And as you go up, you get into savings accounts, you get into time deposits. Eventually you get all the way up to things like treasury bills and stuff like that. And that's an aggregate how the money supply is measured. So I think that point plays well into what you guys are talking about, in that, at the base can be ETH, but we can build all of these other things through DeFi on top of it, which is actually an aggregate, a part of the money supply.
Can I just add one thing? So
Yeah.
I think it's super important to realize how early we are, right? So right now we talk about how, Anthony's mom, wouldn't use ETH, right? My mom wouldn't either, just to be clear, right? But I think the Ethereum economy and the crypto economy is growing so fast. So right now there are about 50 million people or so that own crypto, and most of the people that own crypto are using it for speculation of one sort or another. They're betting on the price of Bitcoin, or they're betting on the price of Ethereum. But like that number, was 10 million just a few short years ago. When we look at the DeFi space, actually Anthony tweeted this out last week. There are about 150,000 DeFi users right now. So 150,000 people like us who are actually using DAI to go bankless, to spend it as payment using lending protocols. I mean, that's the population of a small city. But if you look at the growth rate of DeFi and you fast forward to a year from now, if it sustains its same growth rate, then there'll be 1 million people using DAI. And if you fast forward 2 years from now at the same growth rate, then there's going to be 10 million people using DeFi and DAI. That's only 2021. So this stuff is growing so fast. I think the larger point is when you look at like Gen Z, most of us are probably like millennials, Gen X, et cetera. But if you look at Gen Z, I mean, they're growing up and they're using these digital gaming assets like Anthony was talking about. Like that's so normal for them. So what I think could happen is actually the Ethereum economy could grow to incorporate more of the real world. So it's like an emerging nation state almost, with a burgeoning currency, right? That only 150,000 people are using, but 2 years from now it's 10 million, and then maybe 5 years from now it's 100 million. And then it's 1 billion before you know it, and
then
that's
the world.
Exactly. I mean, that's kind of how it grows, and we're on that trajectory right now, which is why it's such an exciting time to be in crypto, in Ethereum, and in the DeFi community.
Yeah. So we're kind of the settlers in this frontier of this new nation state of DeFi and Ethereum.
Yes.
So yeah, the idea is that right now, Ether isn't very recognizable, but we're on track to have it get there. Okay, so the next point I wanted to bring up is the monetary policy issue, which is a point that the Bitcoiners love to make, how Ethereum's monetary policy isn't as predictable as Bitcoin's. There's no hard cap. There's a social contract, but who knows whether a group of devs in a Skype call or Google call can one day go and change that. So that kind of uncertainty, it can be argued that certainly could make Ether not so good at being money. So Eric, why don't you go first with this one?
Oh, yeah. I'm glad I was picked for this one. I love this one. So I guess I would first say that there's no proof that a deflationary currency is the way forward for a currency. You don't need a hard cap for, on your currency. I would actually argue a deflationary currency is probably not ideal if we're talking actual money and wanting people to spend it and things like that. I think I do understand why people like it's a meme, right? And Bitcoin cap is a meme. People like this. It's easy to understand. They see it as scarce. They want to collect it. People like collecting scarce things. But, at the same time, I think that the two communities are just kind of dividing along this aspect of Bitcoin has the cap meme. People in the Ethereum community would say this isn't long-term viable. How are you going to pay miners? The security of the chain is not going to be strong. In the ETH community, we have this concept of minimal issuance that we can possibly kind of have out there, right? So keep the chain secure, but keep issuance low. And, obviously, the community is going through a discovery phase. It's very early. I think that's the most important point in this, like Ryan was just talking about, and all this stuff, we're still learning. I think, I don't agree with a cap because I think the most important thing is a secure chain. So, once the switch to proof of stake goes, we're going to have under 1% issuance. You take fee burn into account, you're going to be near zero. And I won't go too much into, how is this determined, because it's not, just what Bitcoiners think. It's not determined on a Skype call. It's a lot of us in the community getting together and talking about this stuff. But, I'm not one that thinks you need eventual zero issuance to have successful money.
I wanted to bring up actually 2 points on this one. We're all going to have really strong opinions on this, but just my 2 points here. So you mentioned, Camila, about like how, I guess, like flexible the monetary policy is and how easy or hard it is to change. This is something that I've been, studying for years now, and I've been trying to kind of like correct a lot of misinformation around this, where I don't believe it's very easy to change the monetary policy upwards. So if you wanted to add more issuance, I think that would be incredibly hard. You would have an extremely hard time convincing anyone of that. Going the other way is definitely easier. Definitely, just simply because people think it's going to lead to better price appreciation. Whether that's true or not is for another discussion. But I think for me personally, I have a lot of confidence in the monetary policy because it hasn't gone up yet. It hasn't. No one has kind of put up an EIP and that has gone to like the end of the process and been like, okay, this is going in. We're going to increase the issuance by this amount. It doesn't really make sense to do that at this point. In saying that, at the current price of ETH, it doesn't make sense to lower the issuance either, especially as the hash rate isn't growing for the ETH1 chain. If we're going to lower the issuance rate, then the price needs to go up for that to happen, in my mind, or else we're just like killing the security of the chain, which is exactly what Bitcoin is doing in like a week, by the way. They're just halving the security of their chain. Yeah, the price has gone up a little bit, but that's the long-term risk of Bitcoin, is that the price doesn't go up enough to to make up for the loss in block rewards. And I think that's why, the Ethereum community is more stuck on this, perpetual kind of like issuance, but with burns, as Eric was talking about, like the fee burns and then other sinks for ETH that can bring us down to like near 0% issuance. But at the end of the day, it's all about demand. If we can create more demand for ETH that outstrips like any of the issuance that we have, even if it's perpetual, then naturally, the price is going to rise. It's going to become more valuable. The Ethereum network will become more secure. And I also believe that proof of stake is a better mechanism. Well, Ethereum's proof of stake is going to be a better mechanism than proof of work. That's a whole nother debate, but that also factors into, how valuable you want ETH to be and want the asset securing that network to be as well.
Right.
Go for it, Ryan.
Anyone want to add to that?
Yeah, I guess I'll just add. I agree with these guys, as you would probably expect on the ETH is Money panel. I actually think that Ethereum's monetary policy might be the most underrated aspect of Ethereum. What it does in a minimum necessary issuance policy is it sort of balances the need for security with the lowest possible issuance necessary. And when you kind of forecast into the future and you look at sort of Bitcoin's issuance rate, it's going to be dropping to 1.5%. The entire ETH2
Oh, hey guys,
network.
our stream's off. Our stream's off.
What?
Our stream's off on YouTube.
Oh, really?
Oh, okay.
Oh, we're
You
down?
sure about that?
Did he run it? Yeah, I'm watching it. I've been watching it.
Oh, no.
It might kick back though.
All the Ethereum killers are trying to sabotage this panel.
I think we're still live on
Maybe
Vimeo.
Are we?
on the other channels, right?
Okay. Maybe it's a YouTube. Okay. Sorry, Ryan. My bad.
That's all right. Yeah. So, I mean, when you look at issuance, the reason ETH is migrating to proof of stake is really to reduce issuance to the minimum necessary, right? And that's going to be around 1%, maybe less than that. Ethereum also has these really interesting in-game scarcity games. EIP 1559 is going to be implemented, hopefully, maybe this year, but certainly in ETH 2.0. And what that's going to mean is every time an ETH transaction occurs on the Ethereum network, then a portion of ETH is actually going to be burnt. So this is a sort of a monetary policy issuance mechanism that Bitcoin doesn't even have. And it even brings in the potential for ETH to have negative net annual issuance, even while it's paying for security. So I think it's hugely underrated. I think probably fixed cap is overrated because, as these gentlemen were just talking about, what happens with fixed cap is you're also fixing your security budget. So it's not necessarily going to lead to an outcome where you have the highest security chain. Whereas the Ethereum approach to monetary policy, that's always going to optimize for security. And in doing so, I think that could bring about the healthiest money system and the healthiest money network.
I'm going to push back on all three people here because I think that for any blockchain crypto system to be successful, issuance is going to approach zero over time regardless. And so right now, and the thing I think if we are criticizing Bitcoin's issuance, we are by proxy also criticizing all crypto economic systems at large, including Ethereum. Yep. Yeah. Okay. That's what I thought. Yeah. So this stream is off. So now we're just chatting. Should we?
Oh, no.
It's still recording. As in, should we keep on going?
Just being good.
All right. Fuck it. We're going.
Yeah, I think
Doing it live or not live. And so and so I think Bitcoin and Ethereum's monetary policy are actually much closer than we are giving credit for. And I think the tribalism that you see when the debate between those two issuances is reflected by the tribalism and not much more than that.
David, can I push back on your pushback? So
sure.
I think the difference. So I think the difference, though, in what you're saying is, I think what you're talking about is net annual issuance. Both approaches zero, but there is a difference in that Bitcoin's gross issuance actually is going to approach zero, whereas Ethereum is always going to be pushing out issuance to pay validators. Bitcoin is going to stop pushing out issuance to pay its miners. That's going to collapse all the way to zero. So validators on Ethereum are still going to always be paid with issuance. Now, it may be the case that because of EIP 1559, net annual issuance approaches zero with Ethereum. But to me, there's a big difference because Bitcoin has to, in its monetary policy, has to start relying on transaction fees, on the value of its block space, rather than the value of its meme. And that's a huge like risk. It's a bet because you're changing the market. You're going from a market that's like, yeah, Bitcoin, we want to hold this asset, to a market that's like all about the Bitcoin block space. And is that where security, should be derived? So to me, it's a little bit different.
So Vitalik on his episode on POV Crypto put this really succinctly, as he always does, where Bitcoin, the blockchain system, serves the asset, and on Ethereum, the asset serves the chain. And so with Bitcoin, you get maximum assurances of the cap of the token. And with Ethereum, you get maximum assurances of the security of the network. And right. So I think we're just going to see what does that mean for the long term with regards to monetary policy. I think the only really way to find out is to just wait and see.
Definitely.
I think as well, just to add to those.
Oh, go ahead, Anthony.
I just wanted to quickly add to those 2 points. A few weeks ago, Ryan put out a tweet and he didn't mention Bitcoin at all. He was, I think he was pumping ETH with some Bitcoiner narratives, but he didn't mention Bitcoin at all. And I thought it was really funny because I think, I think that these systems are diverging, like Ethereum and Bitcoin, and like are on such different paths for where they want to go. Yes, they're both blockchains. Yes, they both got these native assets that kind of like trade on the same exchanges. But I think that they're heading down two very distinct paths. And I actually put out a tweet a few months ago about like two grand monetary experiments that we're going to see play out between Bitcoin and Ethereum. And they're very, very, very different if you actually, look deep into it. So we don't know which one's going to win. My bet is obviously on Ethereum and ETH. Like there are a lot of more people betting on Bitcoin and BTC. They, hold all those major narratives at the moment about being a hedge and all those sorts of things. But I think as time goes on, Ethereum basically acts as this kind of this gravity well for like everything else. Like maybe not those hardcore narratives that Bitcoiners always talk about, but every other possible application and use of a blockchain or a financial system on top of a blockchain. I think Ethereum eats all of that, and then it has enough power to go after the big boss, which is being that global hedge and fighting Bitcoin on those top level narratives.
Can we all agree that it is absolutely ludicrous when Bitcoin maximalists say things like Ethereum's monetary policy is a fiat system?
Are you referring to Prompt's? Are you referring to Prompt's email?
It drives me absolutely bonkers because it is the exact same social contract as Bitcoin. It's nothing like a fiat system, and it drives me nuts when that sort of thing is propagated. Sorry, rant over.
Yeah, I think it's pretty clear. I think it's a fact, like fiat currencies are by definition government issued currencies. Ethereum is, it's a blockchain. It's not a government. It's ruled by computer code. It's robot money. Has nothing to do with central banks printing. So yes, we can definitely agree on that. And on the previous issue, we're talking about monetary policy. I think the consensus was that what's construed as being a negative, the fact that Ethereum doesn't, or Ether doesn't have a hard cap, it's actually a positive because it assures that the Ethereum network remains secure. And while in the long term, issuance in both Ethereum and Bitcoin will tend to zero, the big difference is that there will always be issuance on Ethereum, while Bitcoin will have to start to rely on transaction fees, which up until now have been a tiny, tiny portion of what miners are receiving. So it's not clear how the network will move forward, while the path forward for Ethereum is much clearer. So in that sense, maybe we can say we're not sure whether, how good ETH money is versus maybe DAI, but we can certainly say that ETH is better money than Bitcoin. And I think to wrap up, we've already gone, I think, over time, but I think this is an important question because we've, been talking about this for it's been like the major meme, but why does it even matter, that ETH is money? Why is it so important to kind of highlight this fact? Maybe Ryan can go first with this one.
Yeah, I'll try to be brief on this. So like two scalability attributes matter with any any crypto money system, any public blockchain, the first it's talked about a ton, and that is trustless transactions per second. That's the throughput, right? And everyone's trying to scale that. That's why ETH2 is doing what it's doing. But the second is less talked about, and that is trustless economic bandwidth. So that is the value of the base layer asset, the value of the trustless collateral that backs the entire system. And the reason that's important is because all of the other, money protocols, DeFi protocols that are built on top need to tap into that trustless source of value in order to become trustless themselves. If DAI is completely backed by trusted assets like USDC or T-bills or something like that, then the Ethereum system starts to look a lot like the traditional system. However, if we start to build DeFi protocols that may be partially backed by these traditional collateral assets, but also backed by this trusted, protocol issuance, neutral store of value like Ether, then we can start to build a trustless, bankless financial system. So to me, without that economic bandwidth at the bottom, without ETH as money, without ETH accruing billions of dollars in value and trillions of dollars in value, you really can't build a trustless decentralized system on top. You start to look a lot like the traditional system. And the entire point of crypto is not to look like the traditional system. The entire point of crypto is to replace banks, whether central banks or commercial banks, with protocols. Not kings. We want code. We want credible neutrality. So that's why it's essential, and that's why I think we need to continue on with the ETH is money meme.
Great. Anyone else want to add to that?
Yeah, I would just add quickly, I think it's also important to understand that we need this asset to be valuable if we want to keep building on this protocol. So we've seen a lot of Ethereum, I call them now Ethereum attempted murderers because I think they've all already failed, but we see them launching and saying, no, our asset is not money. No, it shouldn't have a monetary premium and all this. I don't know if they're doing that for regulatory reasons or what. Okay, well, that's great, but you're not going to be able to secure anything on your system, right? So we're talking billions of dollars of stable coins and value on Ethereum, hopefully someday trillions. To secure that chain, you need the underlying asset to have value. And one way to get there is to create it to be money, right? So this is a very important aspect that I think a lot of chains besides Bitcoin and Ethereum don't quite grasp.
Mm-hmm.
The ETH is money meme, which really got spearheaded by Ryan here forever ago. It was a defensive meme against people who were saying that Ether is just gas or it's just fuel for Ethereum. When what underpins this entire system is the value of Ether. So ETH is money is really a reforming of saying like Ether is valuable and it's going to be valuable. But ETH is money is catchier and more fun to say and turns into swag that you can buy on EthHub.
3 words.
Thanks for doing the show for us, David. I think I'll finish it up by saying I definitely agree with everything that the three have said. But to add my own point to it, for me, ETH is money is a natural thing. I was using ETH as money every single day in 2017 to buy into ICOs, to buy NFTs. Like they were actually emerging in 2017. I was sending ETH to people. I was doing so much with my ETH that when the ETH is money thing started taking off, I was just like, okay, well, yeah, it is. Like, how can anyone say it's not? Like, I'm using it as money. It's money. It has all the attributes of money, except I guess stability. But we spoke about that already. So I think that for a lot of people, it's come naturally, and that's why I think it's worked. Maybe it's a very insular meme where it only works for Ethereum people. Other people outside of the Ethereum ecosystem don't really know, anything about like ETH being money or don't really understand it. But I still think it works as a good, I guess like bootstrap meme for our ecosystem and for Ethereum, and to kind of, make people, money is valuable to people naturally. So if we say ETH is money, then they'll naturally think, okay, well, ETH must be valuable. Then they can dive into all the other reasons why ETH is valuable as well.
Yeah, and I think it's we shouldn't underestimate the power of memes. Memes in the end are just brief ways of summarizing broader underlying concepts in a community. And I think what this does is say, like we've said throughout this conversation, ETH is valuable and it has actual use. And I think it's a good rallying cry to have the Ethereum community not be afraid of these attributes for Ether as it maybe was in the past. So with that, I think we should thank Ethereal and thank all of you amazing speakers. This was a really great conversation.
And thank you, Camila.
Thanks, everyone.
Thanks, everyone.
Yes, thanks, Camila.
Thanks.